Okay, hi guys. So today I'll be discussing a technical analysis strategy that I have developed keeping in mind the needs of the small investors. Now, why have I targeted small investors in particular? So the reason being that small investors are generally risk averse, right? They do not want high risks and they often lose out on high rewards as well, right? So today I'll be discussing this type of low risk, low return strategy, which is bound to give you profits. And if you use this properly, you're bound to get good profits out of it, right? So what I'll straight away do is I'll open this platform called Zerodha. So I'll be discussing a strategy in two segments. The first segment will be the Indian share market. The second segment will be the foreign currency market, right? So the Indian share. So currently I have Zerodha in front of me. So Zerodha is a charting platform. It is quite affordable. It is beneficial. It is good for small investors in particular. It is quite affordable and it gives you a lot of features that other platforms will not be able to provide you. Right. Okay. So in front of me, I have this chart of Tata Motors for a 1 hour time frame. Right. Right. So this it is essential that you keep a 1 hour time frame because the strategy will work best in a 1 hour time frame. Now you need to have four main indicators in front of you. Four main indicators in front of you. The four indicators are two exponential moving averages, one VWAP line. I'll show you what it is. So these are the two exponential moving averages. The orange line is the VWAP line. The white dots are the parabolic SAR, and I have one RSI. Right. Now I need to modify three indicators out of these. Two actually. So I have to modify these two moving averages and I have to modify the RSI. Right. So the two moving averages, I need a fast moving average and a slower moving average. In the faster moving average, I put the value as 20 candles. So go to the settings, inputs, and 20. Right. For the slower moving average, I put the value as 50. VWAP and SAR remains the same by default, and RSI by default comes with an upper band of 70 and a lower band of 30. I changed the same values as 65 and 35. Another thing that I added to the RSI was the mean reversion line. Right. The mean reversion line is a price point where if the price goes beyond 65, it comes back to uh, this mean reversion point and then it goes in whichever direction it wants to. So this is the point where if the price goes beyond 35 or beyond 65 or close to 65 or close to 35, the price will come back to at least to this point and then it'll go back again or go wherever it wants to, right? So generally this price point comes at around 50, but it again depends on your chart. So as you can see in my chart, it is around 40.85, right? Okay. I've also added this another horizontal line. I'll be coming to that shortly. What this means, right? Okay. So one thing that we need to keep in mind before we begin with the entry rule, the exit rule, we do not have to take trades at the end of the day, which are far from the mean reversion point, right? Now, how do we identify whether it is far from the mean reversion point or not? This is where the second horizontal line comes into the picture, right? So if your RSI is within this band, the mean reversion point and this band, right? Then you're good to go. You can take the day end trade. You can take the trade at the end of the day. If it is beyond this point, it is dicey that we cannot say with certainty what direction will your trade will the price go in, right? Because the price can open at any direction the next day. Okay. So now we discuss the entry rule, the exit rule, and the risk control rule, right? So the entry rule is that you have to wait for the intersection of the VWAP line with the faster moving average line, the 20 candle moving average line, right? You see, this point right here. I have marked it. So this point right here is an intersection of VWAP with the exponential faster exponential moving average line. Right now, if the VWAP hits the exponential moving average, the faster EMA line from bottom up, right, as you can see in this case, from bottom up, it is an indication that the prices are going to go up, right? If the same thing was coming from top down, right, if the same thing is coming from top to bottom, it was an indication that the prices are going to fall. Okay, now we can see that the prices are likely to go up at this point, right? So we need to verify what trade to take, right? Do we buy, or do we sell, or do we hold our position, or what do we do? Like, we confirm this by the parabolic SAR. If the parabolic SAR is below the close of the candle, this point, so this point is the close of the candle and the parabolic SAR is below it, it is a good indication that the prices are going to rise. So the VWAP also told us that the prices are going to rise. The SAR is also telling us that the prices are going to rise, and this is a good time to buy, to enter the market, right? Okay. One last thing we need to confirm is, since this is a day end candle, we need to see whether or not it is within the band we have permitted the RSI to be in, right? As you can see at this point, the RSI is on the mean reversion line, which means that we can say with certainty, some certainty, not absolute certainty, but some amount of certainty, that the RSI will also go up eventually. So it is within this band on the mean reversion line. SAR is good. VWAP is also bottom up. So the prices are going to go up eventually, and we buy here. Now our risk control rule is using the stop loss and the take profit. Right now, how do I use the stop loss and a take profit? If you see on the left hand side, you click the small arrow, you'll see this long position tool. Long position means when you're buying. So in this case we are buying, right? So I place this on the close of the candle, the point at which I'm buying. You'll see this, the green area is the take profit, this is the stop loss. Your vertical distance, your vertical distance bit of this stop loss, the vertical width of the stop loss should be equal to the vertical distance between the two moving average lines at their point of intersection, right? And your risk to reward ratio, as you can see here, should be 1. Currently this is 0.9. Yeah, so this is 1, right? And now you place it on the candle that you are going to take your trade in, right? So yes, so I placed it on the candle, and as you can see, my take profit was hit here and the trade was profitable. Obviously I left out some of the profit because this is a low risk low return strategy, right? Low risk low return strategy. If you had a higher risk strategy, you would have placed the ratio at 2 and you would have reaped the profit here, but again it also increases your risk. So yeah, so you need to be careful about it. It again comes with a trade-off. Returns and risk come with a trade-off. So as you can see here, my price moved from around 166 to around 173, which was a profit of almost 7 rupees per share, right? Which is a decent amount of profit. Okay, so now I close this. I have marked a similar point over here, right? This intersection point. Again, the parabolic SAR is below the close of the candle. The VWAP is bottom up, and the RSI is within the band we permitted it. Again, we use the long position tool. As you can see, the prices here have been going up for a very small amount of time, and after that it has collapsed. So it is vital for us to reap our profit within this band. Now, do we reap our profit within this band? We'll check the close of the candle, intersection point. We adjust the vertical width, we adjust the risk to reward ratio, yes, and we place it on the candle, right? Now if you see, yeah, so now if you see, our trade hit our target, hit our take profit over here, right? Okay, So we saw how even in the smallest of the zones we can reap profits, right? Okay. So now we will quickly move to the foreign currency part, the foreign currency segment. So in front of me I have trading view, right? I'll just reload it. Okay. So in front of me I have trading view in which I have opened a Euro USD chart in a 1 hour time frame. Again, the strategy works best in a 1 hour time frame, right? So in foreign currency you can both buy and you can also sell before buying, which is also known as short sell, right? So our rules remain the same, but in trading view, the free platform for the small investors, it is I do not advise paying $30 to trading view, just to access the just to access the advanced platform. If we can make do with the free version only, I'll show you how. So the free version allows you to have three parameters on your screen at max in one time, right? At one time you can have only three parameters, right? So initially I would suggest you to go with the two EMAs, the fast and the slow, and one VWAP, right? Now I marked this point. I'll show you what does short selling mean. So short selling means that you are selling at a higher price, and when the prices go low you buy in order to nullify your position. And since you're not trading in tangible currency, the volume remains the same, right? So you wait for the intersection of the VWAP. Since the VWAP is coming from top down, remember I told you how when the VWAP goes from bottom top the prices will rise, and when it comes from top to top down the prices are likely to fall. As you can see in this case the prices did fell, right? Okay. So what we'll now quickly do is we need to verify whether or not we are if we are selling it, whether or not we are taking the correct decision, right? So I'll quickly remove this 50 candle EMA and I'll quickly put in place the SAR. Right. So this is my SAR, and as you can see at the intersection point, yeah, as you can see at the intersection point here, my parabolic SAR dot is here, which is above the close of the candle. The candle close is here, the parabolic SAR is here, which means that it is a good time to sell and the prices are going down, right? So I remove, so okay, so press Ctrl Z twice in order to get back your initial chart. You can skip RSI for the foreign currency market segment. It is not that important, right? Now, since we are short selling, so we need to use the short position tool instead of the long position tool. So we place it on the close of the intersection candle here, and we need to, okay, so in this the things get changed, the things get reversed. Instead of adjusting the take profit, I adjust the stop loss, right? And adjust the take profit accordingly. It's one and the same thing though, but yeah, the green part will come below because selling, after selling, if the prices fall, that is your profit, right? Okay, so that is my risk to reward ratio of 1. Now I place it, the center point on the close of the intersection candle, right? Now as you can see my take profit was hit over here before hitting my stop loss, right? So this was a profitable trade. This was short selling, right? Now I will quickly show you a buy scenario in the Euro USD market. I did mark a point, yeah. So at this point what happens is the VWAP is going from bottom up, right? The VWAP goes from bottom up. So now what we'll do is we'll quickly remove the EMA, the fast moving average, oh sorry, the slow moving average, and we'll insert a parabolic SAR. As you can see, the parabolic SAR at the intersection point, okay, it might not be visible. I'll just make it a bit visible. Okay, yeah. So now it should be visible. Yeah, as okay. Just a second. Right. So as you can see, the parabolic SAR at the intersection point is below the close of the candle, indicating a rise in the prices. Right. So it is a good time for us to buy, since the VWAP is also coming from bottom up. Right. So now we you press Control Z and get back your initial chart. Right. And take your long position tool, since you are buying, and place it on the close of the candle, intersection candle. Right. And now what we need to do is we need to adjust our take profit accordingly. Right. So we reduce the width here and we reduce the width here to get a risk to reward ratio of 1. Keep in mind that the risk to reward ratio 1 is minimizing your risk and is hence suitable for small investors. Right. So we place it on the close of the intersection candle. The middle point should be on the close of the intersection candle. Right. And yeah. Okay. So as you can see here, my target was reached at this point in this candle before hitting my stop loss, hence making it a profitable trade. Yes, we did lose out on a lot of profit here, but again, if you take small trades at different points close to the moving average, close to the VWAP, it might turn out to be beneficial. So yeah, this was my trading strategy. Do let me know if you're able to get profits out of it. Do let me know what our accuracy was, and do let me know if any additions, if you think any additions could be made in this strategy. Thank you.